Hello everyone, welcome back to my YouTube channel. I hope you all had a wonderful week. Today's lesson will focus on identifying pullbacks. Many of you have been inquiring about how to determine when a pullback has finished in order to enter continuation trades. The fundamental idea of trading with the trend is to enter trades when the market begins to move consistently in a certain direction. When the market is going down, it is best to take sales, and when the market is going up, it is best to take buyers. It is not possible to have a definite method for determining when a trend has ended and for predicting the precise timing of its continuation. Today, I will teach you one of the concepts that you can use. The reason why I am teaching this concept is because it is easy to learn and it can be used in any time frame. Although there are various indicators available, I personally prefer not to rely on them as they tend to be behind the market. Instead, I focus on using price action and analyzing market structure and behavior to make my trading decisions. By combining market structure and behavior and utilizing patterns to enter trades, you create a powerful strategy that can greatly improve your results and prevent unnecessary trades. The main focus of today's lesson will be on that. As a trend trader, it is important to understand that the market will trend eventually, regardless of the time frame you are trading on. The key to success is to wait for the market to trend and take trades when the market has pulled back. This is where patience and discipline come into play. The idea behind trading with trends is to only take trades when the market has pulled back. By doing this, you avoid taking trades while the market is in a push phase. The reason for this is because if you sell while the market is in a push phase, there is a high chance that the market will continue to go down, and you might not know if the market will pull back or not. By eliminating this uncertainty, you reduce the negative expectancy when taking that trade. When waiting for a pullback, it is important to identify structure and behavior that resemble that pullback and potential continuation. This way, you can take trades with a higher chance of success. The point of today's lesson is to show you how to identify when a pullback has been created and then identify structure and behavior that resemble that pullback and potential continuation. Let's shift to our example for today's video. The chart right here is US dollar versus Japanese yen. We are going to start from daily time frame and shifting on lower time frames later on in order to check for shifting market behavior and structure confirmations. The mandatory process that we should do every time that we open the chart, it is to define the trend, when is uptrend, downtrend or sideways. We can see clearly a downtrend with lower low and lower highs, and is better to highlight on your chart too, when you made this examination of the market by yourself. With a line tool, we are highlighting the swing and correction of the trend, and as we can see, it's healthy downtrend. As I mentioned in the beginning of the video, a trend trader do not enter during a push phase of the market, but wait for a pullback. The question, is there any method to determine when the pullback starts? The most accurate method is to combine fresh supply and demand zones and Fibonacci extension.
Recommended broker is Hanko Trade. Hanko Trade is offering a diverse range of trading instruments and services. The most prominent advantage of Forex trading through Hanko Trade is the offer of low spreads to its customers. You can open a live account in seconds because no verification is required. Fund your trading account with any of the major cryptocurrencies as Bitcoin, Ethereum, Tether and more. Hanko Trade's matching bonus option allows clients to enhance their account margin. The amount that is deposited by the client will be matched and credited into client's trading account. Sign up with the link in the description and deposit to receive your guaranteed 100% bonus.
How to use Fibonacci? We can start drawing them from the beginning of the downtrend till the last established lower low. The minus 0.27 level, it's a strong support and price might start to pull back from it. But don't forget, there is nothing that has 100% accuracy. Do not take it for granted and combine it with other confluences. And do not enter a counter-trend trade because it goes against this strategy. In order to find an edge of a strategy, you must respect it rigorously and not cheat. As we can see on this example, the minus 0.27 Fibonacci level correlates with the edge of a fresh demand zone. Once again, If you are going to trade only this strategy, it's not recommended to enter a reversal trade. Once we established a potential zone for a pullback to start, it's time to determine when the pullback might end. And this is the most important part because it's going to define the entry level. The first level that pullback might end is at previous support that now could become a resistance level. We can add Fibonacci retracement on the last impulse, or so-called swing leg. We can see that 50% and 61.8% correlates with the resistance zone. These two Fibonacci levels that I mentioned are the most important and strongest ones. The next level which pullback might end, it's the last lower high level. Price tend to mitigate towards this level and drops after creating a double top formation. The key zones above these two levels are not considered as the first entry, but as a second one, in case the market experiences a deep pullback and sweeps all the liquidity. There is an imbalance zone and a supply zone above it. These are levels that should keep in consideration once the price reaches them. Once again, we are going to measure the entire downtrend because the second trade is beyond the downtrend structure. And as a result of all this analysis, the best level to enter the second trade is at the edge of the supply zone after the fill of imbalance. And of course, this level correlates with 61.8% Fibonacci. That is considered as the golden Fibonacci in the world of trading. Price pullback at the first zone that we highlighted and dropped in downside direction. Let's shift on lower time frame to determine the potential entry. Because I never use the daily time frame to enter trades, I always shift lower and lower till 15 minutes time frame sometimes. Let us observe when this example provides the necessary validation for executing a sell trade. In this way, price created a liquidity level. Price has two possibilities: to drop without or after grabbing the liquidity. During this rejection, price offered a short-term opportunity to enter a sell trade. The most accurate entry in this example should have been after the liquidity swept, and the last chance to enter is at the minor pullback. That happened after the liquidity swept. The first target should be the previous low, and the second one according to your risk to reward rules. I personally use 1 to 2 risk reward. Price is remaining in a strong and healthy downtrend, and we can apply the same process to determine the next trade. We highlight the resistance level, the similar zone that worked in the previous example. Above this zone, we have a clear supply zone that is located below the last lower high, different from the previous example, when the supply was located above it. Price started to pull back and reached the resistance level. Next, we see a beautiful engulfing daily candle, rejecting this zone. This is a powerful confirmation to search for sell entry after this event. We shift on 4-hour time frame and we see that price broke the correction and the momentum shifted to bearish. On 2-hour time frame, we can see clearly that price broke below the higher low by confirming the reversal of the mini trend of the pullback. We are highlighting structure with a line tool, and we can see clearly that is a reversal and bearish one. And we also must mention the break of parallel channel. We haven't used much the parallel channel breakout during my recent years of trading, but this remains an additional confirmation that worthwhile mentioning. We are all set to enter a sell trade in this moment. The stop loss above the structure, and we are going to use again the 1 to 2 risk-reward ratio to determine the take profit level. New lower low is printed, but as we can see, the bearish momentum is decreasing a little bit. Visually is very obvious. The pullback continued above the resistance level. The next zone to look for a trade is at the last lower high level, in which we have a new supply zone. On our radar, we have 2 fresh supplies in total, and we are going to look closely how market will behave after touching them. Price reached the first zone and swept the liquidity above it, and then rejected the level with a strong engulfing candle. After this huge candle, price pull back most of the times, at least 50% of the body. For the take profit one, we can use the imbalance zone below, and for the final take profit level, the demand zone below. Thank you for watching our video. We hope you found it informative and helpful. If you have any questions, please leave them in the comment section below. Don't forget to like and subscribe. Thank you again for tuning in, and we'll see you in our next video.